I've cut another bonus video. Anybody watching the previous bonus video cut last Wednesday will know that I talked about a rather dramatic reversal in the market on that in the last hour. We had another dramatic reversal, this one in the first hour, and is largely for the same exact reason. Just simple profit taking. You could have again seen this with the two triggers that I talked about then. Momentum plus VIX equals a good trigger to sell. More on that later. The buy-sell incentives, as I said in the last video, are really reversed when you get near the 1100. You're going to get 2 to 1 more likely downside than upside. What I mean by this is your top target is 1120 to 1140. Your downside target is a minimum of 1040 and maybe as low as 950. So you're talking about more room on the downside than on the upside. So you're seeing people buy protection and implied volatility rising. That's the VIX. It's as simple as a fear. Some people call the VIX a fear index, and it is sort of, because people start buying options and especially puts because they're afraid that the market's going to decline. And the decline in the market, oftentimes, this is more true in the old bull days when you saw slips in the market, was 3 to 1 faster than the upside. Obviously, over the course of the last year, you could easily say that that has been reversed because we are at such low levels and this bull move was so ferocious. And that's why you saw implied volatility decline so dramatically and so fast from the 80 range all the way down to what it currently is, which is the 20 range. Now, when I began cutting the Wednesday video, I told you the VIX was 19 and change, and again I saw the VIX, thought the VIX might pop to as high as 28 and maybe even over 30 if and when we got this dramatic sell-off, which I told you the trend had ended then, the big bull trend had ended. We were then in an oscillating stage. We continue to be in the oscillating stage, but what this is, it's the top of the market. It's tipping. It'll test the upside with some dramatic rallies, but what you're going to more or less see is the sell-off. The sell-off, in my opinion, you're going to see 1040 before test the 1040 level before you can go any higher or ever break the 1120 range. You might get up there very quickly, sell off again. You'll see the 1040 range after that. You could see as low as 950. 950, in my opinion, is a buy again. Unless there's some dramatic fundamental change, we're still getting relatively good economic numbers. The market's no longer cheap on an earnings basis or any other basis necessarily. If earnings continue to grow and we get the 3.5 GDP growth that everyone's looking for, you could see this market trend higher. Barini set a number for 1280 next March. Other people have other targets even higher throughout next year. But by the end of this year, you're not going to see those numbers. You're not going to see substantially above 1120 to 1140. You're going to see us test by the end of the year. Again, this is just an opinion. Everyone's got one. However, I do think that you will see a minimum of 1040 and most likely as low as 950. If it gets as low as 950, and again, now your momentum indicator slows down and that sell-off begins just slowing down a little bit, go ahead and buy it there and for the year-end Christmas rally, and that should happen sometime, over the course of the next month. You'll see these numbers. Again, had you been listening, you would have seen an easy sell today after a big rally, which is what I said you'd look for. You get near 1100. We were again at 1090. Now, this is why this sell-off was more dramatic and easier, is because last time the VIX was at 19 and change. This time the VIX was at 22 when the sell-off began and popped to over 24. Again, a 10% move in the VIX during the sell-off. But as you get closer to 1100, if the VIX itself is remaining elevated and or going higher, then the rally is even more suspect and is really, you'll look even more for a more dramatic sell-off. Most everyone is. That's why they're buying the put protection. So again, as you approach or get another rally, if at that level the VIX was lower previously at that same price level, then be suspect of that price. Now, if the VIX should come in dramatically, and as you again approach 1100, you see the VIX at 19 change or 20, just over 20, 25, 20.7, whatever it is, or under 21, that would probably be an indication that that particular rally had more steam. And so again, don't implement this strategy. But I don't think you're going to see that anytime soon. I again think the money's going to be made, at least in the short term, during this oscillating stage on selling the rallies and or the follow through on the sell rally to at least the 1040 and finally the 950. You can either do it with the options, or you can bang the futures, or you can use the cash, or you can just simply take your bull money that you've made over the last year off the table right now, wait for the correction, and look for a new place to enter. Best place, in my opinion, to enter would be the 950 range. But again, you saw a dramatic sell-off, and the reason, again, is simple profit taking. And I know on CNBC they had the original statement was about the Treasury, wanting $126 billion fund. You know what? That information was out before the market. So why did people rally it if that's the reason? Other people said the reversal in the dollar, which did coincide. I think it followed. I can't say that it could not be correlated. And finally, the ING news, which is inexplicable out of Europe. Somebody said that had something to do with it being down, led the financials down. Europe, folks, was up and following us up when this happened. The ING news was out for, good 10 hours before this. Clearly not the right answer. I don't understand why people offer these solutions to the sell-off, but I guess they have to say something, and if they don't know anything, they're going to give some crazy reason. So, once again, look at the previous video. Hope this helps. Good luck. Happy trading.